Hello, ladies and gentlemen. Thank you so much for tuning in. My name is Ernest Toll, and I'll be Jardine Realty in Australia. Today, we actually have the good fortune of having a very interesting speaker that will be speaking about something that's very, very cogent for the times. But we'll wait for a few more minutes before we commence our interview with Min Chi Lim, who is with the Bank of Melbourne. And the topic for today is actually about refinancing. And should you refinance now? So, hi, Min Chi, welcome. We'll give the audience a few more minutes before we start.
Okay, thank you, Ernest. Thank you very much for having me here. It's definitely a pleasure and to meet all of you, and happy to just share some thoughts with you and answer some questions and just some Q&A that you might have. Let's just wait for the other people to come on and then we can start.
Will do. Min Chi, out of curiosity, real estate has always been a very, very hot topic.
Yeah.
And I just wanted to ask you, over the last maybe a year or two, due to the pandemic, how have you seen in your own personal experience the real estate market from your perspective?
It's actually interesting that you said that. I've joined, I've been a lender for a very long time, probably about more than 15 years, but I've joined Bank of Melbourne just before the COVID started in 2020. And since I started, I've pretty much been working from home because, we've not been allowed to pop into the branch and not move around as much as we used to. But we've been very busy. A lot of it is from refinancing, but recently we've been seeing lots of people buy properties as well. So we've been very, very, very busy. People are buying on like finance clauses, or they're getting a pre-approval to go for auctions. So certainly, the market's always buoyant. People need a home to stay. So, irregardless of what the economy is doing, people still need a home. And then because the tax rates are so high here, anybody who's got some extra income and feel like they're paying a lot of taxes, they tend to also be advised by their accountants to go buy an investment property. That keeps us busy.
So despite the fact that you are working from home, it's probably longer hours that you're working.
It's true. I think the statistics overall is that when people work from home, you tend to work longer hours because you log in earlier. You get up and then you just log in, check emails, start doing stuff. And then you also tend to overrun a bit on the timing in the evening. So we tend to work a lot longer hours. But I guess it's a lot more efficient than being on the road. Like, because I'm a mobile lending manager, in the past, we would drive around, meet clients at their homes or offices. Sometimes get caught in traffic. So you got to plan for this travel time, which is not very productive time, really. So, I really don't mind working from home. We're doing a lot more things digitally now, like, video conferencing to identify the clients, and all the documents are all electronic anyway. So makes it easy for everyone.
Okay. Well, Min Chi, I think we should not delay anymore. For those of us who've already tuned in, we want to make sure that we use the time wisely and we can address all the questions that they will be asking or put forward.
Okay.
So, ladies and gentlemen, let me just quickly introduce who Min Chi is. Min Chi Lim is a mobile lending manager, as you've heard earlier, with the Bank of Melbourne. She has spent the last 15 years as a lending professional, and has worked in all four major Australian banks, including NAB, CBA, ANZ, and the International Bank of HSBC. Now, prior to banking, she was a tax consultant for PricewaterhouseCoopers Singapore. She possesses a master's degree in applied finance and a Bachelor of Science honors in finance and accounting. Now, on a private side, she's very passionate about helping people achieve their financial goals. She is multilingual. She is able to speak in Mandarin and several Chinese dialects. And during her private time, she enjoys golf, cooking, and mahjong. Now, from a professional basis, Jalin Realty and Minchi have worked very closely and have established a long-standing relationship with the Bank of Melbourne. Mm-hmm. And through her experience in residential property lending, Minchi is able to provide a wealth of experience and assurance during the loan application process to actually tailor-make a solution that's for you. So I know that Minchi will say this, but I'll say this again. There is no standard solution that Minchi will apply. She will always look at the circumstances that you are uniquely exposed to and refer only the products that will be most appropriate for you. I think that one you can rest assured she will actually do that. And we confirm that the information discussed remains private. We will not disclose anything that you discuss with her. In fact, when you have the discussion with her, even Jalin Realty will not know. So again, thank you so much, Minchi, for coming in. And we really appreciate your time and effort in spending what I think is a cooking and dinner time for you right now to be with us and all our audience today. So Minchi, without further ado, can I ask you to delve into, should I refinance and should I refinance now and why Bank of Melbourne? You want to take it away?
Right. Thank you, Ernest. Thank you for the introduction. If you guys can see the screen right now, I've prepared a pack for all of you just to give a bit of overview of what what we're about, what the economy is doing, and what sort of home loans that might suit you for different purposes. So we'll start off with the economic forecast, and this is done by our senior Westpac Group economists. For those of you who don't know, Westpac is owned by, Bank of Melbourne is owned by Westpac. So we're part of the Westpac Group. In Melbourne, we are known as Bank of Melbourne because of the branding, but across the country, we are known as St. George Group, and then in South Australia, it's Bank SA. So just a bit of the, people always like to ask, what do you think of the housing market? What's happening in the economy? Currently, although, after COVID, there's been a big uplift in property prices and activity. But currently we are kind of entering a phase where, it's cooling off. And as you can see from the heading, it says housing boom runs out of steam. And, the Westpac economist is forecasting that it will flatten by May, and then likely by the second half of the year, it will start to fall, from December onwards. And that, the decline will continue all the way through to 2024. And the reason is because of inflation, what's happening in the world right now, as well as, the interest rates are, slated to be hiking up. We've had, one of the lowest interest rates for a very long time now, for a few years. And, it's predicted that it will start moving up now. And because of that, the market's already starting to react to it. And hence, things are slowly, flattening. And, you'll probably see that, the effects will spill over, all the way till the end of the year. So this is by Matthew Hassan. He's our senior economist with Westpac, and you can actually go to our website, the public website, and you can read a little bit more about it if you like. He's also got a video there that explains, all the ins and outs and how they derived, their forecast or their prediction of the market. So what does that mean for buyers and sellers if we know that, in 6 months' time or 9 months' time that the market is likely to decline? What does that mean for buyers and sellers? Well, the old adage runs true: buy low, sell high. So sellers, if you're thinking of selling, sell while the price is still high. And for buyers who are thinking of purchasing, their first home or another property, you can start preparing to purchase so that you can, hopefully get a good deal when the prices start to fall. And for homeowners, you could look at fixing interest rates to lock in lower rates, and hence lower your repayments, or at least fix in a repayment so that you're not affected by the interest rate hikes. First home buyers. So there's two groups of people that we want to address here, and the first group is the first home buyers. With first home buyers, excuse me, with first home buyers, some important things to consider is up to 95, like we lend you up to 95% borrowing with 5% genuine savings for deposit. And there is a lender's mortgage insurance that comes into play because of the high level of borrowing, the high percentage compared to the value of the property. So there is a fee payable, but it allows the first home buyer to get into the market with very little deposit and helps them, at least to get their foot in, as opposed to saving up over a long period of time. Some of the other things to look into for first home buyers is that, the Victorian government, or most Australian governments, but Victorian government does give a first home buyer's duty exemption or a concession, depending on what your circumstances are. And if you're eligible, you pay very little or even no stamp duty. So a website that you can check is the SRO website. And again, I've put a link there. And then for first home owners, there's also a grant of $10,000 if you purchase a new home that is under $750,000. For another group of buyers who don't want to pay the lender's mortgage insurance and have a bigger deposit, if they have up to 20% deposit, we'll lend them the standard borrowing of 80%, and that is without any lender's mortgage insurance required. And then there's a third group where we have a product called Family Pledge. And this is where a first home buyer may not have the deposit, but their parents are willing to lend them their equity that's available to help them purchase the deposit. So how does that work? Is that if, let's say, mom and dad has a property that's, excuse me, that's maybe gone up in value over the years, they've had it for a long time, and they've got very little loan on it, and they've got plenty of equity there, we can actually use that as a second security and allow them to lend that equity to their child to have the bigger loan, but the child must be able to service the larger loan. So potentially they can borrow 100% of the purchase price if they have enough equity from the parents' property. For first home buyers, Bank of Melbourne has a special promotion offer just to help the first home buyers get in the market without paying the hefty lender's mortgage insurance fee, which can be up to $15,000 to $20,000 depending on the loan size and the amount you borrow. We've got a promotion that you can borrow up to 85% with a $1 lender's mortgage insurance fee. That is a special thing that we're running. It's still ongoing, and it's for first home buyers. The next group that I want to address is the investors. With investors, there are some important things to consider. A lot of times people go into investing because, like earlier on, if you were on the call before we started, I was telling Ernest that, with the high tax in Australia, a lot of times, once you get to a point where you're paying a lot of taxes and you've got some extra money, your accountant is quite likely to ask you to buy another investment property so that you can get some tax deductions. And a good way to do it is to unlock the existing equity on your home so you can maximize the tax deductions. What it means is, you can borrow the whole amount, just like with the family pledge. You can borrow the whole amount and plus costs even, stamp duty costs and everything, if you have enough equity in your own home. So in the example that I've put here, if you have an existing home value at $800,000 and a loan outstanding at $500,000, 80% of $800,000 would be $640,000. the available equity that you have would then be 640 minus the 500,000 that you owe, which means you can free up 140,000. And this can be used as a deposit for your next purchase. If you're purchasing a new investment property that is worth 600,000 in
Oh dear, ladies and gentlemen, I think the line, Minchi's line, is a bit disrupted. We will wait for a little while to see whether she's able to log in. And then for those who actually have any questions whatsoever, we will be able to host questions that are sent through our chat. The button is actually available on your screen. Just send the questions across, and when we do have time and when Minchi gets back, we'll be able to field those questions to her to try and make those questions known. And if you wanted to actually have a private conversation with her, not an issue as well. We will also connect you and Minchi if you'd like to actually have any questions that you do not wish to field publicly. You can also do that. But more likely than not, ladies and gentlemen, if you actually have a question that is very generic in nature, we are definitely sure that Minchi is able to help you or point you in the right direction in terms of where you can find answers to those questions that you have. I was talking to Minchi earlier, and while we are waiting for her to come back, I was talking to Minchi earlier with regard to the refinancing market over here and the property market over here, just to get some feedback. But again, I want to backtrack a little bit by just saying that I do apologize. You can hear that Minchi is actually having a bit of a cough, and that's because she's actually at the tail end of a COVID exposure. So she's still at home, and she's actually talking from home. So ladies and gentlemen, if you just hang on for a minute or so, let me just find out where Minchi is, and I will be able to continue with this presentation shortly.
Hello.
Minchi, welcome.
Sorry, I don't know what happened. You just said you have left the room. So apologies, everyone. So
no worries. Before you continue, I just wanted to let you know that I actually took the time when you were away just to tell them that if anybody has any questions, to just write in the chat box, or if they wanted to actually have a private consultation with you, we'll disclose your details shortly after this.
Okay, so, sounds good. Sounds good.
Please continue, Minchi.
Okay, so sorry about that. Now back to what we were saying. If your borrowing ability allows it, you can actually borrow the full amount of the purchase price of 600,000, which means you don't actually have to come out any cash on your own, and you can also fully maximize the tax deduction. So you're able to get deduction on a bigger amount. The thing we always say is that because your home loan debt is a non-deductible debt, right? So if you got extra money, you should be putting towards your home loan, and just maximize the most borrowing you can for the investment property, because that one is tax deductible, and it probably helps you a lot more than paying down your home loan before the investment loan. Obviously, if you can pay off everything, it'll be good, but otherwise, the priority is always pay off home first, and then work on paying off the investment. Right. Well, next. So what's next for the investor buyer? Well, we've got a few steps here. One, if you could contact us, we're happy to review your current loan structure and interest rates and see whether they still suit you. Because sometimes, even though you've got the loan from years ago, and back then it might be like the best rate or the best structure for you, but your circumstances have changed over time and your plans have changed, and that might not be helpful. Like example, maybe let's say 5 years ago, you wanted to just pay off your home loan as quick as possible, and you took a 10-year loan, but because the repayments are very high, you find that you're not able to borrow more money, or you're not able to do a lot more because of the cash flow. So sometimes, people have different plans like, oh, I want to now do some investment, or I want to upgrade my home and I don't want to be stuck with the large repayments anymore. So we can help you restructure. The other thing is about the interest rates. Like if you did a loan, say 3, 4, 5 years ago, the chances are, you're paying a higher rate than the current market rate, because back then, a lot of the lenders were more conservative than now in terms of giving out the discounts. So although you might be on a variable rate loan, and the variable rate, it's, variable, of course, but, that changes. But with the discounts might be a lot higher now. Like we can give up to 2%, 2 point something, whereas back in the day it might be 1.3, and that was very good already. So certainly have a look, and with the higher discount rates, you will end up with a lower lower interest rate, and of course lower repayments. The second thing to do is to refinance to us if our rate is lower, and if it helps you save money in a better structure. Currently we are running a 4K refinance cashback offer. That's supposed to end on the 31st of March, but I just received an email before this session to say that it's been extended to to the end of May. So if you refinance or put in your application anytime before then, you'll be eligible to get a $4,000 cashback, and that's cash straight into your account, no tax, nothing that you have to pay. And it's quite a good deal. And then the third thing is, let us help you access equity. If you're an investor buyer, let us help you access equity to prepare for your next purchase. And that can be done by helping you prepare the deposit to have it ready for you, so that, if you saw something you like, you're ready to make an offer, and you're ready, to even go for auction if you like. Because sometimes you see something you like, then you want to go and access the money. It takes a while, there's a process, you submit your application. So it's good to have that ready. So, you see a good deal, you can go for it. And then the other bit about helping you access your equity is also, to also at the same time prepare pre-approval for you. So while you have your deposit ready, you also want to know that you're able to borrow more for that investment property, and that, you're able to actually go for it. It's no point paying a deposit and then later find out, oops, actually I can't borrow the amount that I really want. So, by doing a pre-approval, it gives you the confidence that, the bank thinks that, that you are a good candidate, and we've looked through your income and everything. And you can have the confidence to make an offer and purchase your next property. With the pre-approval, it's always like income and all that sorted out. So, we've approved it basically, and it's always only subject to your valuation and the property you buy. So, it makes it a lot it makes it a lot easier for you when you know what you can and cannot do. So that this is some of the things that we can help you with as an investor buyer to prepare for your next deal, and also to help you save money and review your current structure. So this is what I spoke about for refinances. We've got a $4,000 cashback, minimum loan size $250,000. Apply by, it says 31st March, but we've just extended it to 31st May. So apply by 31st May, and then you'll be eligible for that 25 grand. Okay, interest rates. This is a topic people always ask, oh, what's your rates? Or tell me what's your lowest rates. But because nowadays we price interest rates based case by case, right? It's like, your say, you've seen the adverts on UE, car insurance and all that. Not everyone is the same. So our rates are not the same either. We price it based on how much you're borrowing, how many, like what's the LVR, loan value ratio, what percentage you're borrowing, and, what kind of situation. And of course, there's so many different loans, right? You can have principal interest only, owner occupied, investment purposes, fixed rate, 1 year fixed, 2 years fixed, so many different options. So it's best to contact me directly, and then we can, price it for you case by case. But just to give you an idea, we can go as low as 2.14 on the basic variable for owner-occupied and 2.44 for the basic variable investment. And this is on principal and interest repayments. Some of you might be interested, in buying an off-the-plan apartment or townhouse. That's certainly very popular because you get your stamp duty savings and of course you get maximum tax depreciation because it's a brand new property. You can depreciate over a longer period of time. So it is a very efficient way of investing. If you buy an off the plan, we usually get the questions like, so when do I start applying? The property doesn't settle for 1 year, or not till next May or next June. So when do I start applying? Well, we usually do it within 90 days because our approvals only last for 90 days. Same with the pre-approvals that we talked about earlier. It lasts for 90 days. So 90 days before the intended settlement, usually the developer or the real estate company will get in touch with you and say, hey, we're probably looking at settlement at this date. That's when you start coming to us, and then you can start an application, hand in all your documents, your supporting documents. And then once we give you an approval in principle, we wait for the developer to let you know that they've issued titles, because they have to have the subdivision and the titles issued so that we can do a full valuation, and then we can formalize the loan, because we can't formally approve until we've actually got the title or whatever the volume and folio number is to that property. So once that is done, we formally approve the loan, and then we send you the loan documents to be signed. And then after that, we just wait on settlement, which we will liaise with your solicitor. And nowadays it's all done electronically through PAXA. If there is an amount that you have to contribute in cash or whatever, we will then between the solicitor and us, we will let you know how much to prepare. And then the settlement will go through, and then the titles will be lodged with the State Revenue Office, and it will be registered. So that's pretty much the home loan journey for off-the-plan purchases. Well, I'm open to any Q&A. I'm sure there's quite a number of questions, so I'll let Ernest moderate on this one.
Well, thanks so much, Minchi, for sharing with us some of your thoughts on the program that's currently being done by Bank of Melbourne to help people refinance at a better rate or a good rate if they actually are stuck with a higher rate. I do have some questions based on what we've talked about. The first one is that, oh no, Minchi, are you still back?
Yes,
okay,
I'm here.
You I got worried.
I'm here.
Okay, Minchi, is refinancing now still something that you would advocate for? Just out of curiosity. I mean, I know that rates are projected to go up, but is it very minor in terms of where it's projected to go up? What are your thoughts on this?
If you remember the slide from the economists from earlier, they talk about a few rate hikes that they're expecting from the RBA, the Reserve Bank of Australia, and I think they are expecting about down the track, about 3 rate hikes in the next 1 or 2 years. And certainly, if you see the trend with all the banks now, the fixed rates are increasing. They've been increasing, I don't know, since early in the year. They've been increasing quite a number of times already. And that's a good indication that, everybody feels like the rates are going higher. And people are wanting to fix because, they don't want to be kept out and, be paying a higher rate. But the variable rate's also still very low at this point. It's still very low because although the fixed rates have gone up, the variable rates hasn't actually been adjusted yet. So when people want to refinance, they've also got to take into account what their plans are. it's no point fixing, say for 3 years, and then 1 year down the track you think, oh, I want to sell my property, because when you fix a loan, there is a break cost when you want to break the loan, so that's not as flexible as a variable rate loan. But there are a lot of people still refinancing because mainly the reasons I've said before, like if they got a loan from a few years ago, chances are they are on a higher rate than what they will get today. And everybody wants to save some money, right? Like, if you don't have to pay such high interest rates, why do that? And then the other reason for refinancing is, of course, like to review and see whether it still suits you. And also sometimes people refinance when, they want to access some of the equity, buy a car, renovate a home. And also, of course, if they wanted to buy a second property, and that's when they want to, ask us to do a valuation and see how much their existing property is worth and how much they can access. Things like buying a car, for example, if you took a car loan, it's going to be a lot more than your housing loan. So most people tend to do that through their home loans. They'll top up their home loan just so that they can, access some money to buy a car rather than get a loan from a car loan finance company.
Okay. Minchi, I have some questions here from some of the viewers. Alice Lau writes, can Bank of Melbourne lend to non-citizens and overseas buyers?
Yeah, currently, most of the major banks do not lend to overseas citizens and foreigners. There are private lenders who do that under private funding, but then their rates will be pretty high, and also, be prepared to pay some fees. But most of the big banks do not lend to foreigners anymore. In the past we did, but not anymore.
I think that was a matter of a policy as well, if I'm not mistaken.
If it's an Australian or PR working overseas, depending on the countries that they're working and whether they're paid, what currencies they're paid in, we will look at it from a case-by-case basis. And depending on what visa category that you're that you have, as well as for PR, what type of visa category. It is a little bit more complicated because we have a very big matrix on what we accept, what we don't accept. So, case by case, feel free to contact me, and then I can have a look into it and see whether we will do it.
Okay. This question was also raised by another viewer, Lua Yi, on whether can foreigners get financing from banks. So I guess you've already addressed that. Thank you very much. We also have two more viewers, Yusuf and Kenneth, who want to connect with you directly. And I think that your details are already there. So they can get in touch with you because they actually want to have a direct discussion with you on
happy to help.
I also have some other follow-up questions that I have received on a personal basis on my phone. Is there an age limit for those who want to seek refinancing? I mean, if I'm 60, I'm already sitting on a property that has been paid off for nearly X period. I still have maybe 10,000 left. Do you still consider me as an eligible client to refinance?
Sorry, are you saying the balance of the loan is 10,000?
Yeah, that means it's still a property under financing. I haven't paid it off yet, but I'm 60 years old.
Are you withdrawing any more money? Or are you just thinking of refinancing at 10,000?
Yeah, I'm just trying to get the money ready for maybe an investment property for my children.
Okay.
Or as my legacy, as part of my legacy.
Yeah, it all depends, right? Like, we don't really discriminate against age per se. It all depends on, what the purpose of the money is and whether you've got income. So if your income supports the loan, what we need to see is that you have a retirement plan. If you're buying an investment property, it's generally okay. If, let's say, you are getting more loan for your owner-occupied property, then we've got to see that you've got a retirement plan in place. For example, you've got super, or you've got other properties that you can sell so that you can pay off your loan. So for example, right, like if you wanted a 30-year loan and and you're 50 years old, and you're going to retire at 70, for example, right? So in 20 years, you retire, but you're taking a 30-year loan. Then we need to know, like in 20 years' time, how much of the loan is left and what is your plan on paying for it. If you got a lot of money in your super and that's enough to pay off your loan and also live on, it's not a problem. If you got another investment property you can sell, it's not a problem. Or you currently you only have that one property, but it is a big property. And when you retire, you're thinking, I'll downsize to an apartment. I'll sell off my home for $2 million and then I'll buy an apartment for, say, $800,000, and that's going to be enough for me because I'm less mobile then. And, I don't want a big home anyway. I just want to be able to lock up and travel the world. We're happy to look at that too. So it all depends on whether you've got an exit strategy or retirement strategy. As long as, we can support that, we're happy to lend to you. So we don't actually say, just because you're old, the maximum we'll give you is 10 years or whatever years. So it all depends on the situation of the clients.
Okay.
And as long as they've got an income to support it. So when I say income, it may not just be employee income or business income, but it could also be we've got self-funded retirees that have like a big self-managed super fund, for example, and because they're of retirement age, they can take as much as they like out of there. And that we can also use as their income to service whatever loan that they want. So, we are flexible and, we don't really discriminate as long as you can show a means of repaying your monthly repayments and that you've got an exit strategy in place. We pretty much will look at the loans.
Okay.
Yeah.
Is there a cap on the number of properties that can be refinanced? Hypothetically, a person may have more than one properties under financing with either a different package at a higher rate or with other banks. Is there a limit how much they can, how many properties they can cross over to Bank of Melbourne?
No, there's no limit. Basically, if you went on a package, the package gives you unlimited number of loans and unlimited number of accounts. So there's no there's no limit at all. Even if you're not on the package, even if you did like the basic home loan, for example, or basic investment loan, that also comes with no fees, and there's no limit. Basically, you can bring as many as you want over when you refinance to us. Or you can borrow as many loans as you like, as long as you can service it.
The referral is still $4,000 per
Yes.
property they bring over, right?
Not per property. It's like one property. So yes, $4,000 for the first property, and then of course if you bring more over as a package, we can actually maybe price a better deal for you, and give you some sort of savings, and obviously also customize and tailor the package for you, so that it meets your needs and your purposes.
Yeah, I have a follow-up question that was asked. You mentioned earlier with regard to private lenders per se. Just for our listeners' benefit, what are the main differences if they take the loan from a bank as opposed to other forms of lenders?
Oh, okay, sorry. So we're talking about like the private funds, is that right?
Yeah, correct. So
Yeah,
why go
okay.
to a bank?
So what happened? I think this was probably like 5-6 years ago. So before that, most of the Australian banks were lending to foreigners. As long as you can show, that you've got income, pay slip, and they were happy to lend to foreigners. But then there were some issues with fraudulent paperwork and all that, and the government came down quite hard on the banks. Obviously, the banks were making a lot of money, and they were happy to keep lending. But then, because of a few rotten apples, a few bad hats that ruin it for everyone else, the government came down hard on all the banks, and since then, like they've decided to stay away from foreign loans.
Yeah.
The ones that are existing are still around. Like if you got a loan as a foreigner, some years back, they won't cancel it. So you still have the ongoing loan. They have given a bit of a loading on it. So the interest rate is a bit higher than if you're a local person.
Yeah.
But because the banks stopped lending to foreign individuals, what happens is that, in the last 5-6 years, a lot of these private mortgage funds appeared, as a gap to provide funding where the banks were not doing. So, they were lending to all the foreigners who bought properties here in Australia. But of course, they wanted to make money, right? And because they're not a bank, they don't have the liquidity. So, they had to lend at a higher rate. And that's why, the rates are higher if you go to a private funder. And also the fees are higher. They make you pay for your own loan documents and solicitors fees, and it can come out to a few $1,000s just from all the fees. And then the rates are way above the market that the banks are charging.
Well, for the qualified local borrowers who want to refinance, I'm just curious. I want to hear from you as to why go to a bank as opposed to other form of lenders.
You mean like a mortgage broker?
Yeah.
Yeah. The advantage of going to a bank is that because you deal directly with the bank, one, the process and the turnaround is faster. Whereas go through a mortgage broker and then they go through, they process the loan and they go through another channel. So there's additional handling. And so it's a bit slower. And because they represent so many banks, right? Like some of them represent up to 30 something, or not just banks, but, the second tier and the third tier lenders like credit unions and all the smaller financial institutions, they are less likely to know the policies as well, because, if you're selling 30 something products, you're not going to know all of them as well as, if we were in a bank. So, with the bank, we are more focused and specialized, and we tend to know our policies better and also our products better. The other thing is that with directly with the bank, you obviously get after sales support. Whereas if you went with a broker, they basically do your loan, and because they're not part of the bank, right? If you have some problem later and say, I've got some issues, my offset account or my credit card, or I need some banking thing done, they're not able to help you. So they'll ask you to go to your local branch or just call the hotline. So you're going to get less of the after sales service. Whereas if you came directly to us, if you have any issues, just text or email. And if it's not something that's my specialty, I'll forward it on to the specialized department and someone can help you. So you're not left on the call center, on the phone, waiting, in frustration, trying to talk to someone and not having someone take ownership. So it's always better to have a relationship person look after you, because, at least, you're going to be taken care of. So that to me, I think it makes life a lot easier. There are those online banks as well, which you might have slightly cheaper, a little bit cheaper interest rate, but you got to do everything yourself, upload all the documents, and they don't have a physical branch. We have been refinancing a lot of people, from some of these online banking places, and in the end they all said, we just want to come back to where we can actually physically walk into a branch and have someone help us, because, although it's a little bit cheaper, sometimes the frustration that they face along the way with all the support and, after sales is really not there. I mean, there is a reason why it's cheaper, because their costs are lower. They don't have to have, the ATM, or they don't have to have branch staff, or they don't have a lot of things. But because it's cheaper and they don't have a lot of things, your life is not going to be as easy when you face a problem. So it's just part and parcel of that, the cost cutting has to come from somewhere. Yeah.
Is this program only for properties not yet financed by the Bank of Melbourne?
You mean the $4,000?
No, the refinancing package that you are currently we are talking about currently, is it only for properties not yet financed?
So for the $4,000 refinance cashback. That one is only for loans that are in the other financial institutions, not with Bank of Melbourne and not part of St. George Bank SA and Westpac Group and RAMS. But even if you're in one of our Westpac Group banks, we can still help you review and see whether we can give you better rate and all that. It's just that the $4,000 wouldn't apply because it's really for people coming from elsewhere. But we won't forget you, and we will do our best still to see how we can help you. Either review your loan structure or review your rate, and make sure that you're on the best deal available.
For that one, I think working with a banker who has my interest also at heart is going to be important.
Yeah.
If I were to engage a third party to do that, only when I reach out to them, then only I get the service. But if I have someone who can let me know, hey, the rates are coming on, coming off, this is a better package, or do you have multiple packages, having some advice is going to be much, much more beneficial to my financial well-being. Would you say so? Yeah,
definitely. And I think our bank's pretty good at reviewing rates. Obviously, you have to also reach out to us. We will tell you if, let's say, the fixed rates are going up, and let's say, for example, I know that you were considering fixed rates. If it's going up, I will normally give a call to my clients and say, hey, you were thinking of fixed rates, it's going up, do you want to do something? But like for people who have been in the bank for a while and they want their rates review, unfortunately, we can't like every time call everyone and say, hey, you want your rates reviewed. So, it's up to the customer to reach out to us and say, hey, it's been a while since I, got my loan. I'm not sure whether I'm still on the best deal. Can you review it for me? So, we're definitely good that way, but we don't have the resources, unfortunately, to go and call everyone and proactively review for them.
I understand.
Yeah.
Well, I've got two more questions that were raised. The first one is that, if I refinance but I don't use the funds, would there be any penalties or charges applied to me?
No. No, in the case where I was talking about earlier about accessing your equity, and getting your deposit ready, for when you actually purchase something, it's the same concept. Like, let's say, for example, you owe 400,000, and then when you refinance, you're thinking, oh, look, maybe down the track I might buy another property or I might do a renovation, but I don't need the money right now. But since we're doing the application, let's just take some extra money out. Right, like let's say, for example, your property is, worth a lot more, and there's equity in there, obviously. So let's say you want another 100,000, and your loan's 400. So now your new loan is 500,000, but the 100,000 is not being used. You can open an offset account and put that 100,000 in there. What happens with the offset account is that whatever money is in there offset against your loan. So, example, 500,000 loan, you've got 100,000 in there. That 100,000, you don't pay interest on it, and that's why it's called offset account. So you only pay interest on the 400,000 that you use, and that 100,000 just sits there until you start using it. So let's say 6 months down the track, you use 50,000 of it. Then you'll be charged interest on 450,000, and the extra 50,000 in there, you still don't pay interest on it. So there are a lot of ways of structuring your loan, and there's quite a few products that will cater for different things. So interest only is one good one if you want to, because interest only, let's say if you keep it as a separate loan, 100,000 interest only, you actually make no payments at all if you don't use it. But we can talk more in details if the customer is, if any of the clients are interested to find out a little bit more. Happy to talk more in detail.
Minji, I have a follow-up question to that. I mean, we talked about refinancing. We talked also about pre-approval a little bit. Yeah. Now, just say, for instance, the client refinances and gets a certain sum, and at the same time also gets a pre-approval to buy another property.
Yeah.
And due to the valuation, there is a gap between the value of the property, and therefore it will also impact the loan size for that property purchase. If the pre-approval is higher than the value of the property done by the valuers, and therefore the bank will lend a lower amount, regardless of whether the pre-approval was at a higher amount. Can this refinancing amount that they've obtained be used as a top-up, or can the bank give another loan just to finance the gap?
Yeah, so it depends, all right. If we set it up right from the front using two properties as security, as in your existing loan and the purchase property, and your existing property has equity in there. If there's enough equity, it doesn't matter that the valuation come in low, because that might help it, right? Because if there's enough equity, even though the valuation comes in lower than the purchase price, for example, and let's say there's a gap of 20,000, for example, but you've got enough equity to cover that 20,000, then it really doesn't matter, or you can still borrow the full amount for the purchase. So that's one of the advantages of actually securing the loan with two properties, especially if you're using the equity from your existing one.
Right. Okay.
Yeah.
Well, ladies and gentlemen, thank you so much for your questions. And obviously, for those who want to have a private discussion with Min Chi or want to reach out to her directly, her details are flashing across your screen right now.
Yeah.
I just want to thank Min Chi for her time and thank Min Chi also for her thoughts. Although I can say hand on heart, not every application will meet with approval. You have to qualify to begin with. I know hand on heart, Min Chi will do her best to try and get you not just a loan or the a refinance package, but the best refinancing package available and customized to your requirements. That one I can say hand on heart, Min Chi will do, and the team will do actually.
Yeah, definitely. Well, thank you very much for having me, and thank you to all the listeners for listening to me. Please feel free to reach out and either directly to me or to Jarlene, and I'll get back to you as soon as I can. Well, thank you, Ernest.
Yeah, Min Chi, sorry, something just came up as a question over here. If the property is not in Victoria, but in Australia, but the buyer or the person who has the property is now living in Melbourne, can they refinance that property?
Yeah, no problem. We're not we're not limited by geographic. We've got clients who don't live in Melbourne and has property not in Melbourne as well. As I mentioned earlier, we are part of the Westpac Group, and we're part of a multi-brand multi-brand outfit. So with us in Melbourne, we're called Bank of Melbourne because of the branding. But elsewhere in Australia, say in Queensland, WA, New Territories, Sydney, we're called St. George. And then in South Australia, we're called Bank SA. Now, we all use the same system. So, for example, if you have a property in Queensland and you happen to walk into one of our St. George branches, you just have to show your bank card or ID, and they can actually see all your bank account details. So, we are actually one bank. It's just that, different name and different brand for different states. And there's no limit to, what you want to do. I mean, obviously, we've got people investing everywhere, and Brisbane, I guess, is a popular place for investors. And even like New South Wales as well. So we're not limited by it, and we do certainly have the knowledge. Like there are different mortgage requirements, in different states and all that, and we do have the people to help with all the settlements and everything.
Min Chi, along those lines, can a property in New Zealand be refinanced?
Not New Zealand, no, they're not Australia.
Only in Australia. Okay.
Yeah, only in Australia.
Okay. I hope Kevin Wong raised a question with regard to having equity and having a family pledge and arranging for pre-approval. Kevin, I would strongly encourage you to reach out to Min Chi because your circumstance is quite unique. Just get in touch with Min Chi for that. Leonard Chong that raised a question with regard to foreign property investors. I'll be able to answer that question. Min Chi has already said earlier that the bank system over here only lends to local buyers and PRs. So I'll definitely be able to chat with you more on this, Leonard. Do stay in touch. I'll connect with you shortly. There's a question raised by Kevin Wong. how can you get tax deduction on home loan interest if you're an employee? I think, Minchi, if you correct me if I'm correct, this is more of a question of a tax consultant to answer.
Are you talking about home loan as in your owner occupied, or are you talking about just home loan as investment? You can only get tax deduction if it's an investment property. So if you live in it, then, there's no deductions available. So it doesn't matter whether you're an employee or not. Like, a lot of employees do end up buying investment properties. And as long as it's for investment purposes, you will be eligible for tax deduction. But it's probably best to talk to your accountant and, have some advice on your unique circumstances.
Yep. Kevin, do stay in touch with us. If you need more assistance on that, we also work with a great bunch of tax consultants who help create special programs to help you achieve what you want to do. So again, ladies and gentlemen, reach out to Minchi if you need anything, or stay in touch with me. I will flash out details shortly as well, so that you are able to get your refinancing questions all answered, whether or not you are local or not. Please shoot them across. And even though the session with Minchi is coming at the tail end, you can still reach out to her through us if you like, or also directly to Minchi. So Minchi, thank you so much. I'll go on to the next part of the presentation, which is for all those who have refinanced or have a bit of cash and they don't know what they're looking for, but are looking for something to invest. I have something really exciting to share shortly. So thanks a lot, Minchi. I'll move on to the next presentation. So, ladies and gentlemen, I wanted to just share a little bit about, if you're thinking about investing or buying your first property, why Melbourne and why the Melbourne CBD in particular? Now, the biggest reason I would definitely say is about people, location, jobs, amenities, and opportunity. And it all starts with this. Australia is reopening and has already reopened. And because of this reopening, Melbourne, which has been listed as one of the top 10 cities to live in the world multiple times, is going to be benefiting a lot from this reopening. Though not all the borders are open 100% as what it was prior to the pandemic, it's slowly coming on board already. Now, the interesting thing is this. Melbourne, let's just look at it from a position of international students. And this is actually from Wikipedia. A total of about 900,000 students come to Australia. And this is a trend that is actually on an up and up, of which 32% of them come to Victoria. Guess which city benefits the most from these international students' arrivals? Melbourne is definitely one of them. Now, this actually is from the Australian Government Department of Statistics, Education, Skills and Employment. You can see, ladies and gentlemen, that the number of student arrivals is almost beyond 800,000. And that's quite significant. And the housing is definitely something, as a student, you definitely will need housing as well. Now, what is the availability of housing? That's the situation that is going to be needed to be addressed if you're a student coming here. And if you're a parent, having your child come over to Australia to study, you'd be also very concerned, making sure that your child actually has a place to stay, whether it's a rental or you buy one for yourself, for your child to stay. If you look at population growth per se, and this is from the SGS Economics and Planning Unit, you actually look at the 4 highlighted areas: Docklands, Melbourne CBD, Port Melbourne, and Southbank, all within a 5-kilometer radius. Everything is slated to grow in the next 20 years. The average growth rate is quite high. 3.0%, right up to 200%. Now, Port Melbourne is slated to boom because of what's going to be happening there. There's a lot of revival work over there. So population growth, jobs growth. What attracts people to come to the city? Jobs. Where they make the money? Jobs. Where they are able to finance their lifestyle? Jobs. Where they're able to use the funds that they make to buy things. And as with people who age, they always are thinking as well, not in terms of the dwelling, but also what to do after that. So passive income, recurrent income. So instead of putting money into something that doesn't generate alternative income or passive income, getting into a property ladder would definitely help. Now, this is actually taken from the City of Melbourne Development Activity Model. Now, what's in green basically is all the permits that have been approved for new developments here in Melbourne. Yellow or orange is actually properties that are under construction. So there's quite a lot of activities over there. And the one in light blue is basically the developments that are under permit, or they've applied for the permit. So that's still going to be taking some time for delivery to happen. So as you can see, with the influx of people coming into Melbourne and the Melbourne CBD, although in the past year and a half to 2 years, due to the pandemic and the closure, yes, there were a lot of properties that were not taken up. There was an oversupply. But I will show you in the next set of slides some very encouraging news in terms of the availability of units for rent, which is very encouraging for if you are a property investor. Now, this is actually on a greater picture in terms of what the areas we were talking about earlier, the Melbourne CBD, South Bank, Docklands. To focus a bit closer in terms of the East Tower and the Melbourne Quarter per se, the one that's highlighted on the bottom right is actually the building that's going to be done by Mirvac, and that's only built to rent. Mirvac is not intending to sell. They're specifically building that to rent. Now, as a business, it's great because it's recurrent income. They know that the demand is definitely going to be there. There is a shortage over time for people who want to come and live and work in the city. And therefore, they are building this as a cash flow generator for themselves. Now, the East Tower is the one that's highlighted in purple. It's a building that's already ready to move in. The green tower to its left is the West Tower that will only commence building later on this year. So this is something that we shared earlier with when we had a discussion with Urbis, and we had a discussion with Urbis, I think sometime in October, November last year. And at that point in time, when I did this Google search, wow, vacancies in CBD, huge, 10.4% over the past 6 months. And this was dated the 5th of August. Very, very high vacancy rates. Can you let me know? Can you tell me what's the percentage of vacancy rates right now? This is taken today, 3.2%. If you actually have a property in the Melbourne CBD area, what we are seeing currently as a company, the supply rates are very, very low. So what's going to happen, or what is already happening, the rental rates have started to come up because of the limited supply that's already there. So if you are, in fact, I've been talking to some of the homeowners who have properties in the Melbourne CBD area, and they're telling me that they are optioning for shorter rental duration periods because they don't want to lock long-term contracts in right now. So they are opting for 3 months, 6 months before they decide to go on 1 or 2 years, just because they know that the rates will continue to lift. So that's a very encouraging sign if you are a homeowner. If you're not a homeowner and you want to be in the Melbourne CBD area, you definitely have to look at alternatives and what you can do with your money. So with this, ladies and gentlemen, I just wanted to share a little bit more with regard to this amazing development that Jalen Realty is marketing. It's called the Melbourne Quarter, and the East Tower specifically by Lendlease Development Corporation. So let's watch a very quick video, and with that, we'll continue to chat after that. Welcome to Melbourne Quarter. This integrated master plan development by Lendlease Development Corporation is situated steps away from the Southern Cross train station and also the Melbourne CBD. This development consists of residential, commercial, office, and retail units. The East Tower brings the best of city living right at your doorstep, and limited choice units are available. Do get in touch with us to find out more, where you as an owner-occupier or an investor will be able to find a program that is most suitable to help you build and grow your real estate portfolio. Don't delay. These choice units will not be on the market for long. Ladies and gentlemen, Melbourne Quarter is actually quite interesting as well, because right now, if you were to purchase before June 30th, there is a stamp duty waiver that you also qualify for. So you will literally save about 5.5% of the prices in terms of the stamp duty. And prices start from the 1-bedroom onwards at 497,000 and above. So do get in touch with us. There's quite a few choice units. Actually, not quite a few choice units. There's a few choice units that's still left that I think that you'll be really surprised with, and we'd be more than happy to help you with that selection. All right. So with that, ladies and gentlemen, thank you so much for your time. We've come to the end of our show. Thank you so much, Minchi, for taking the time again to come and join us. We hope that everyone stays safe. So Minchi, get well soon. I can still hear your cough, and we've made you speak a lot today. So get well soon and overcome your bout.
Mm-hmm.
Yeah.
Yeah.
And,
thank you, everyone. You've been great.
Yeah. And thanks again, everybody. Do keep in touch with us and connect with us if you can on Facebook. We are Jalin Realty, or write to myself, ernest.toll@jalinrealty.com.au. And we'll see you soon for our next talk. Bye-bye.
Bye.